So what this means, and what I love about this tool, is it gives me an indication on when to get involved in price. As you can see, this is the move lower before the big impulse higher, so we can just mark this out from this low all the way to this high. Now, I can't do anything until price comes into deviation -2 to 2.5, so we'll just quickly play price out and see if we get that. Okay, nice. So we're starting to come into these levels, but it hasn't tapped into it yet, so I still can't do anything. Okay, nice. So there you can see we've now tapped into this area, deviation level 2 to 2.5, and look at that reaction. That is no coincidence. So what I'd normally look for here is something such as divergence. So once we have a divergence inside the deviation -2 to 2.5, what I'd normally use is something such as an inverse gap as an entry. So you can actually see here that we've candle closed this gap with some pretty strong momentum. So this would be my entry point here. And in terms of stop loss placement, that's completely discretional. That's completely up to yourself. So maybe I'd have my stop loss something like this, and then I'd simply target a 1 to 2. And if we just play price out, we'll see if we get stopped out here. No, it's pretty much come straight down to take profit. And that's how simple using this deviation tool is. Just being patient. I've not got involved in this area of price here. By doing so, I may have been manipulated out of break even, and I've been patient enough to wait for price to come into my key level, which was deviation 2 to 2.5. We've created a divergence, we've had a really nice reaction from this area, and I've managed to catch a really nice 2-hour trade from that area.